everyone, and welcome to the IR Update. Today with us, we have Andy Kyzyk from OTC Markets. Hi, Andy.
Hi, Amanda. How are you?
Great. Thank you for being with us today.
I'm very excited to be here.
Andy, I know you for many years. I'm not going to say how many, but I'm not going to look old, but tell us a bit about who you are and what you do.
Sure. Thank you, Amanda and MZ, for hosting this. We've worked on many years in many cross-border transactions, primarily from North and South America, but particularly from Brazil. But fundamentally, I've been working in the capital markets industry for over 25 years, focusing specifically on how to help non-US issuers access North American investors and have a secondary quote or a listing in the US. For the last 15 years, I've been working at OTC Markets, which operates a regulated stock market trading over 12,000 global securities to regulated US broker-dealers. And fundamentally, OTC Markets is the largest US stock market for international companies.
And how does OTC Markets help companies navigate the complexities of different markets and regulations around the world, particularly for companies operating in multiple jurisdictions?
So what's interesting is that many investors are seeking access to trade new product, to invest in new companies, be they in South America, be they across Europe or Asia. And many companies have always had a very nervousness about being SEC reporting because all countries have their home market exchanges. In the US, what we've done is that we've wanted to take the complexity out of being public, reduce the cost and simplify the process. So the access to the foreign securities comes through an exemption called the Foreign Private Issuer Exemption. The U.S. Securities and Exchange Commission has an exemption called 12G32B. And that allows for a foreign company who is listed on their national exchange to have a secondary quote in the U.S. on OTC markets without being SEC registered. This really simplifies the process. So when we look at the landscape of multiple countries with multiple exchanges, the first thing that we do is we have to determine that the exchange is a qualified foreign exchange. And typically that would mean that the company has current and ongoing reporting requirements, both for corporate disclosure, corporate material disclosure, and financial disclosure. So, for example, in Europe, many companies report in half-year results with interim reporting periods. And they do that in accordance with their local exchange. And what we do in the US is 12G32B requires that the English be made available to investors, and it's in English language. That simplifies the process from having to translate any accounting. So we have in our arsenal already qualified dozens of foreign exchanges. So for example, a Brazilian company who meets B3 Bovespa disclosure would have that information in English language and post that information to OTC markets. And when they do that, they satisfy the requirement for making their information available to North American investors. I also want to say that when we look at this exemption has requirements. It's not just, you can't just go down to a foreign country, establish a quote, and come here. In many instances, as a foreign private issuer, you have to demonstrate that you have an operating business there. Companies that are listed on local exchanges generally do, and how that management translates and was the majority of that business. So the nice part about foreign companies joining OTC markets is that it's an easy way to light up the North American screens. And I think that as we navigate these jurisdictions, we found a solution to give the US investment appetite an opportunity to hold non-US securities through a regulated US broker-dealer in an account that trades during US trading hours.
Very good. And what were the main changes for traded companies at OTC once the company upgraded to a higher regulated status?
So in OTC markets, we operate three primary markets. You have QX, which is the best market. It requires financial standards as well as corporate governance disclosure. You have our middle tier, which is OTC QB, which focuses on emerging and venture companies that requires corporate governance and a minimum 1 penny bid price. These two markets are top tier markets, and they're considered recognized and established public markets. And that's important because the disclosure and certifications that are required are higher than normal for normally, let's say, a pink company. It actually, our team does a significant amount of due diligence, and it reduces the risk for information. The key is we want to have good and verifiable information so an investor can analyze value and trade those securities. The lower markets on OTC are Pink, Pink Limited, and Expert. Pink is an open market. Companies can trade, but functionally, there's no added benefits to financial standards. There could be limited floats. Many broker-dealers can't necessarily always advise on those securities because QB and QX meets a requirement in the US that allows brokers to solicit, recommend, and advise non-accredited investors. Whereas in the pink level, all you really have is just a quote. On the expert market, you don't have the ability to post disclosure because you're very delinquent in your reporting. One of the major changes that occurred in September 2020 was the US Securities Exchange Commission recognized OTC markets efforts and actually put in place a rule change to what was called the 15C211. And that rule allowed for OTC markets to give us the authority to determine that proper disclosure by a company is available to allow for a broker-dealer to quote that security. Under the old method, a broker would have to go and get permission to trade from the financial regulator. Now we have that capability. We only do that for our premium markets, OTCQX and OTCQB, which are our best companies. And that really gives us an opportunity to distinguish the hierarchy of the market. Companies who have a quote should really strive to meet the standards and the eligibility to join QB and QX. Just as a statistic, I thought you might be interested in knowing that QX has around 600 companies that are quoted, which is 5% of the market, but it trades over 30% in value. So the quality of those issuers brings a premium. QB probably has over 1,200 companies quoted, and these are the emerging and venture companies, or about 10% of the total number, which exceeds $37 billion in terms of turnover. Okay, those are significant numbers. The more that you disclose that's verified, the better you go offer an opportunity for an investor to determine his market risk to invest in a company. And this segmentation allows for companies to really make themselves stand out. For example, if you're a Brazilian issuer quoted on B3, or if you're a British company, your information doesn't come to the US. So you can establish a ticker. All level 180Rs trade on OTC markets. And then what you can do is once you actually establish that ticker, you offer an opportunity to trade those shares. So fundamentally, thinking about moving to QB and QX, which are premium markets, offer many benefits. Some of the benefits I would probably characterize as improving home market liquidity because you're not fragmenting the shares. On OTC markets, the trade mechanism is really allowing for a US investor to trade through a US regulated broker dealer for a ticker symbol, through a ticker symbol, and that trade gets routed, it's settled and cleared in the home market, which means you're adding value to the home market activity, but you're drawing investors from the North American market. From some studies that we've done with Oxford Metrica, a couple of interesting results have occurred. One is that liquidity for home markets has increased by 25%, 26%. So think about 1 in every 4 trades is coming from the North American market. Liquidity increases, valuations have increased. We have seen that over a period of time, since this rule change, there's been a 16.7% gain in value for OTCQX and OTCQB issuers compared to 1% for pink issuers. So the corporate governance requirements, the disclosure requirements do add value for the corporate issuer and make those securities accessible to a non-accredited family office, high net worth, private wealth management client in an easy to trade manner.
I think that ties a lot with the last question I was going to ask you, which is working with global corporate issuers for 2 decades now. What do you think are a few key observations the successful companies use in growing their North American ownership? And how has the use of technology influenced this process?
This is a great question because it involves the value chain of service providers. MZ is a strategic advisor to many issuers, investor relations, public relations, strategies. And as a market, what we've seen is a few things that work and a few things that don't. So I've got 5 key takeaways. The first and most important is that investors are data-driven today. And being data-driven, those investors seek information. So the first place and the most important one, I think, for a corporate issuer to consider is how to create a comprehensive corporate website, having and separating your operating business from your financial business, incorporating an investor relations page, which can talk specifically to disclosures, multimedia, interviews, short video clips, post earnings, events, also research and corporate governance. The operating business is very important, but talking about your company to the financial community is how you manage your sales and income to grow that business. That would be the first one. I know that MZ provides a lot of help and support around building some of those strategic elements. So the first place investors will go is, let me see what's on the website. What I really like to see is a dedicated section, information as much as I can consume. The second is companies should focus on profitability and growth. This is the number one and key metric for a company's success. You've got to execute your business strategy and get results. The success of executing your business will drive your achievement for growing volume. I get a question all the time. Oh, I want a lot of volume. Maybe a small company with 5 or 6 in the management. And I say to them, well, if you have 5 or 6 people in management, how are you going to keep re-educating new investors and execute your strategy and operations? You know, I think that don't get fixated on the trading volumes. Volumes will follow good execution. Deliver the results. Don't predict your results. I think that profitability and growth will also attract investors. Putting out news that you've executed your strategy, and over time, that success point will grow into more volume for your company. The third is research. The days of investment banking research is a thing of the past. If you're a super cap company, you'll be covered. But for many companies, they're not covered by investment banking. So they have to get sponsored research. There's very good sponsored research providers out there. There's many on the premium provider service directory for OTC markets. And I think that 2 things about research: you want to have that distributed to your investors. You want to have it posted on your website. And fundamentally, it's going to reflect You can also port it to the OTC markets page if you're quoted in our market. And I think that when you have that, you can judge and give more information that's data-driven to the investor community. One thing that when you're exempt under this foreign private issuer rule, your information in English that you have from your home market exchange is posted to our market. So it keeps information flowing. Research is also an important part of that, the distribution. So if you do have current research and it's in English, put it on the website, make it available to investors. There's more and more information coming out about research, but it's a great tool. It's also a good measurement for how a company is explaining what they're doing and a good feedback mechanism as they talk to research analysts. The fourth point is heat map targeting. Fundamentally, heat map targeting is a company looks at 8 or 10 of its competitors, looks at their top 20 institutions and mutual funds, and starts to look to see who holds them and who doesn't hold my company. How does one start to engage on a regular basis that activity? So when that portfolio manager rotates out of his position, your company meets the metrics, informs them, engages in conversation, and builds that ownership. This is an ongoing process. At a professional level, many investment banks do this. Many strategic investor advisors like MZ does this. We also provide peer analysis for companies. So if a company says we want to look at who the holders are of these, we'll provide that. But we're not in the business of actually solving that crisis for a company or solving that opportunity. It's really something to give them an idea and they can formulate it. It's important to have corporate access and regular attendance at conferences. And I think that many issuers need to determine which investors they want to see and get a good feedback loop from who's taking them on the road. Industry conferences are ways to interact with other companies as well as bankers. Always return investor calls. If you don't have time for investors, they're not going to have time for you. Having regular updates, inviting them to earnings, having analyst days, as we're seeing more come back online now, are a really good way to have a progress and a map for success. OTC markets would love to be part of this strategy for many companies. And there's a huge benefit to moving up to QB and QX, which are two premium markets. So I think the North American investors and getting access to them requires work, but the returns speak for themselves. I'm not sure if you have any views around that, but I'd love to hear any comments or views that you might have around some of the strategies and successful corporate tips that they can exercise.
I think you mentioned using technology as a leverage for companies, a good CRM platform, target well, so actually measure your time and know who you are speaking to. So that's also a very key element of IR. And of course, having a great website. Yeah, go ahead.
The speed with which investors need to consume data, organize the data, and make determinations are important. But you want to get as much data out there as possible for investors who want to trade through a US broker-dealer like a Fidelity, a Schwab, an E-Trade, or a TD, and own those shares either in an ADR form, American Depositary Sheet, or an ordinary share. So I think those are the primary key takeaways that I have. But remember, good disclosure, consistent disclosure, and executing a business strategy is really the key to how a company can move forward.
Thank you so much, Andy. Those were great tips for investors as professionals, and it was great having you here with us today.
Thank you. Thank you to MZ for having me.